for me, trading is 95% planning and it's 5% execution. People focus too much on the very specific area at the time. And then afterwards, when they look at your presentation and say, crikey, why didn't I do it? Because they're just not looking at the big picture. The advantage is that you end up with a much bigger lot size because you end up with a smaller stock. We are all very good at looking at somebody else and say, well, that's obvious why he's done, what's he doing? But to be self-critical is difficult.
Hi, everybody. This is Boris Schlossberg. Welcome to another episode of The Trading Battle. Today, we have a very, very special guest today, Marc Walton, who is the founder of Forex Mentor Pro, a actual old school pro himself, has been in the game for decades at this point, and has really had a very, very storied and interesting journey in terms of how he went from sort of a curious retail trader to a true retail trading pro. We are welcome and have you to the show, Marc. Very, very nice to have you. We've never met before, but I've heard a lot about you and we've crossed paths. Love to find out a little bit about your background because, you've been in this game for, I would say, almost decades, right?
Right.
I'm sure you've seen the markets change, and I'm sure you've also learned a lot of very interesting lessons along the way, which many new traders are probably just discovering now. So tell us a little bit about your background into how you came into the financial markets and got the market bug.
I got the bug initially in the dotcom boom in the 90s with stocks, but in retrospect, it wasn't particularly talented. What I was doing is it was going up and it was fairly easy to buy and hold.
Yes.
And then I made the classic mistake of thinking it would go on forever and promptly watched a lot of it come all the way back down again and some of it disappear. But it did stand me in good stead later on when I got involved in crypto in 2020. So it was a hard lesson, a painful lesson. I think like a lot of people as well, having suffered losses late 90s and gone through all that, I went away from the markets. I didn't really understand what I was doing. I was lucky I was in the right place at the right time. Although the recurring thing for me is trying to catch the right market at the right time, which I've been very successful in recent years with crypto and gold, as well as Forex and stocks.
Right.
And then with Forex, I got involved in Forex out of necessity. And I actually think that was a good thing because I find that most retail traders come into this, they either are in the camp of, I want to get rich quick, and which we know never works, or like me, this looks easy, I'm a smart guy, I could do very well at this. And I had a business in the UK and I was coming up to the big 4-0 and I initially bought a little red sports car, which my wife classed as the midlife crisis. I am currently looking to buy another one, which is a later life crisis. And we sold the main house, bought some houses for income, and one suitcase each went to live on an island off the coast of Africa. And I went from earning six figures to very little, but I was singing and playing guitar in a band. And I thought I'd retired. And one of the things with retirement as well, people think when you retire, you spend less money. I mean, my retirement was semi-retirement at that time, and I got 4 young kids in private school. So it was never going to work.
Correct.
You suddenly realize that you're going through money like crazy because you've got all this free time. It was a cafe society. It was in the Canary Islands. And we were just going through money like crazy. And I needed to find another way to make money. And I stumbled after building websites and things. I stumbled on Forex, and that was probably 2022, I think, 2002. And in those days, there was hardly anything. There certainly was nothing on YouTube. I don't even know if YouTube was around then. And I bought a DVD off a guy. It looked really easy, and it was all technical. And I used to think technical was nonsense. And but it was a good basis for what I do. In fact, there's some similarities still what I do now. But I had the classic journey. I had 2 years of trying to do it for myself. I was doing it 8 hours a day on 15-minute charts, which was the worst thing ever. And I got to the point in the end, I would have to quit. And it was wearing me out because to wake up every day and to be in a negative position and it's just getting worse and worse.
Yeah.
And it's such a lonely game as well when you're doing it from home that I was on the verge of quitting. but I had to make it work. Otherwise, we would have had to go back to the UK, and I did not want to go back to the UK. And I think because of the necessity aspect of it, that's where a lot of retail traders struggle, because they come into this as a hobby, or they would like to do this, or they want to, but if you've not got the mentality of walking through walls to get there, you're just not going to get there. And so for me, ultimately it turned out to be a good thing.
So what was the radical change? At what point did you say, oh, well, maybe I have this a little bit under control now. Maybe I'm beginning to understand the market. What were the things that you did that changed your behavior and your results from continuously losing to maybe, break even to positive?
I started to stop losing, which is a kind of a common thing I find, having been teaching people for 20 years. A lot of people get to the phase after 2 or 3 years where they're not losing, but they're not winning. So, but it doesn't justify the time and effort that's gone into it.
It's kind of a necessary phase. Like people completely underestimate the value of not losing. They just think, I'm going to win right away. But in fact, there was a trader named Marty Schwartz who wrote a great book called Pitbull from the 80s, and he used to always say, you can't go to first until you go through neutral first.
Yeah.
You have to stop losing before you can actually start winning.
Yeah.
Yeah. So sorry, good. I interrupted you.
No. But well, actually, that's an interesting thing as well, because I come from a sports background, and in sport, you are, the reason for doing it is you want to win. And I actually find sports people and people from a similar mindset are the hardest to teach sometimes, because you have to get to the point where a loss is just the numbers game. Right. And so for me, I had a brilliant win ratio. My win ratio was always 70% plus, but I was losing money. And so I was classic thing, letting the losers run, getting out too soon, and all the other things. But I was just focusing on the win ratio. Hey, right. I can't be doing this wrong because I'm winning 70% plus of the time. Right. And so a lot of it's a mindset. And I was fortunate enough to find a mentor. I basically took a few months off because it was making me ill. But I knew that I could do it. And I managed to find a retired trader who also was very good, specialist in psychology. And we kind of worked through a lot of things. And it's funny because I had a guy literally yesterday reached out to me for some advice. And he's where I was 20 years ago. And he's overtrading, over-leveraging, revenge trading. And it was exactly the same scenario I was in. Right. And it's the same scenario most people go through. Right. So for me, I started to do well, but I could destroy a month's profit in a morning. And then the last time before I was on the verge of quitting, is I went 5 months, steady, consistent profit, controlling drawdown. 3 days, I'd lost the lot. And I just...
What happened in those 3 days? Was it just a matter of like, you had a wrong trade, you got larger, revenge traded, the losses got larger? You sure? Is it basically parallel losses?
All of them. And then my brain left the room. So
right, and then you don't even you are only focused on getting it back at any cost necessary.
Yeah,
of course.
Yeah,
that mindset. So of course I have it. Everybody has it. That's probably the hardest thing to step out of. Like,
yes,
the hardest thing to step away is to step away from the screen when you are furious and all you want is to will the market your way. The market will never will your way, but you are, determined to will the market your way, to bend it to your whim. It's very, very tough to do. Yeah.
The thing is, as well, because it's a lonely game, I used to do really well in London and then give it back in New York. So I spent 6 months trying to win New York. And when I found the Rich Friesen as a mentor, he said, "What are you doing?" He said, "You're really good at London. What are you playing at?" Right. And again, it's having somebody to tap you on the shoulder and just say, "What are you doing?" I mean, we are all very good at looking at somebody else and say, "Well, that's obvious why he's done, what's he doing?" But to be self-critical is difficult. And I found as I've got older, it's a really good habit to have, to be able to say, okay, I screwed up there. I shouldn't have done that. Stop, get out, walk away.
Is that one of the reasons why you founded Forex Mentor Pro? Because you realized that there was a incredible value to having a third party audit to sort of like we are basically personally incapable of seeing our own flaws. We need another person to kind of point those out.
I'd like to say that it was at such a high level of morality, but in truth, after I worked with the mentor, he recommended me to a fund in New York. Would not be allowed now under any circumstances. But so they put me on a small account. Then eventually I was working on a big account, and it was the best thing ever for me because suddenly I was in a rule-based environment, and it was very plainly made out. If you break the rules, you're out.
Right.
And so I had 3 or 4 really good years of strong discipline and structure and trading a bigger account. So I didn't need to try and make 10% a month. I just needed to make 3 or 4 on a big account, which is a really, really important thing.
Right.
When I then decided to go work for my own private clients, and I'd gone from eight hours a day on a 15-minute chart to 3 or 4 hours a day, I was dangerous when I was bored. And so I started posting on Twitter ideas, and people kind of, and in the early days of Twitter, it wasn't the hate fest it is now. And people started saying, hey, this guy seems to know what he's on. Will you teach me? And I coach football. I've always liked to teach. And so, yeah, I started to do it. And then more and more people started asking me. I thought, well, hey, I could monetize this and be able to give people help as well. So at the end of it all, hopefully it's a two-way street. I mean, it's the same now. I am semi-retired now, and I don't accept many private clients anymore. But I'm fortunate. But I only want to work with people who it's a two-way street. I don't want to just sit there and say, you do this, you do. I want to get some feedback and pushback. And
you find working with different people, I'm actually curious, do you find you have to create customized, like, is it everybody's strategy is the same, or is every strategy customized to their personality?
The latter. I mean, we teach a strategy, and it's I've used the same strategy for 20 years, which is very unusual when I talk to people. Right. But it's the same strategy, except I've just taken so many things off. And I basically now have a couple of EMAs. I have the 200 EMA and the 55 EMA and fibs and candles, and that's it. And I'm looking at so the days of having too much. So when somebody comes to me, if they're completely new, then we teach them our system. If they just join as a regular member, then they go through the course. It's a regular system. But if it's somebody who wants to go a bit further, like the chap I was talking about yesterday, he's been doing it for 20 years. He has some strengths that we could work on. And so it would be foolish for me to say, well, don't use Bollinger Bands anymore, or what, if it talks to you, keep using it. So ultimately, and everybody that comes to you for private coaching is on a different stage in the journey. So you have to tailor it because it's not one size fits all. Yeah. But on a group scenario, we just had a live session that we do every week. Yeah, you're teaching a basic strategy to everybody. Right. I think ultimately we all end up with my system is not some $10,000 system. It's bits that I learned from this guy and that guy, and you just come up with something that works for you.
I think, listen, if you're in this game long enough, you understand that there are really only two systems. There is the continuity, which is trend-based systems, or mean reversion. You're either picking tops or bottoms, or you're trading continuity. Everything else is just footnotes. It's one set of indicators, other set of indicators, some set of structures that's comfortable for you, and that's it. And I think, the same as you, the longer I go, the more I take away. Like my charts have 3 dots on them, and that's I really need to understand, because it's like you say, the price talks to you, and it's your job to kind of understand its language.
Less is more, for sure. Yeah. And to me, all I'm looking at is repeatable patterns all the time. Right. So the joke in Mentor Pro is I am spookily accurate, and it is my edge that I am very good at picking entry points, often from hundreds of pips away. But it's not rocket science. It's just looking at probability all the time, and it's saying, well, hey, it bounced here last time, and the time before that time, this current week, last few weeks, I've kept saying to people, do not be longing the euro at the minute, because we're just bouncing off a major resistance area that's been going on for years, and therefore the probability is that it's not going to work. Right. And so to me, it's just probability. And I teach people look for confluence of reasons. So I will say I want the whole number, I want horizontal support resistance, I want a trend line, I want a Fibonacci, I want an EMA. You need 5 reasons. It's the simplistic way to look at things.
Right. So 5 points of price action that they'll kind of dovetail into a zone where, you have a lot of confidence that it's either going to. So interesting enough, are you a continuity trader or reversal trader? Because it sounded like you were.
Well, I trade pullback. So I don't trade the physical breakout. I wait for the breakout and then I look for the pullback. So I am looking for price to pull back in an uptrend, to pull back to fibs, trend lines, etc.
In the very, very short term, you're actually a contra-trend trader. You're buying the dip in the larger uptrend, or you're selling the rip in the larger downtrend. You're effectively, on a very, very short term basis, you're contra-trending because you have a longer term view. But that's why when you're right, your accuracy is so good, because you are essentially entering at that pivot point where the larger trend is going to resume itself, whether it be up or down, right?
Yeah. And so I say I don't take just one thing, but I kind of think, well, they always said that the bank systems were heavily influenced by fibs. And I only bother with the fib once we get to 50%. So 50, 61.8 or 78.6. And then everybody notices as a trend line. Lots of people trade with an EMA. Whole numbers, as you know, the last few years, whole numbers have been really important. And psychological levels, etc. So as more reasons that there are, then it kind of shifts the needle of probability into my favor. And then the final part of the equation is it must have the potential to make at least twice the risk. Otherwise, it's not worth bothering with.
Right. If you're correct on the retrace, a 2-to-1 risk reward is almost a given. In other words, if it's going to bounce, it's going to bounce hard, and it's going to bounce at least to the trend line point, and your risk is actually very small because you're essentially buying very much close to the bottom or the top of the pivot point. That's what.
Well, the advantage is that you end up with a much bigger lot size because you end up with a smaller stop. Sure. So, years ago, I used to do one on a breakout where you would fib the breakout and then 50% retracement and take it from that. But the principle is the same. If we suddenly get a big move out on a candlestick and it's 100 pips, well, the stop needs to go at 100 pips and 110. Whereas if I can get it on a pullback, I might get it with a 25 pip stop. Lot size is 4 times bigger, easier to make money.
That's true. That's very, very true. That's really, really interesting. You said something very interesting at the beginning of the conversation, that it's really about picking the market. Like you said, that really your greatest skill, your greatest success it's not so much even if you're on the right, so it's like, if you're on the right side of God, right? I always say that. If you're on the right side of gold. If you were on the long side of gold for the last 2 years, you really would have had to be bad at trading to have lost money. So that's kind of, it starts with that. How does that process start for you? How do you look around and say, hey, this market is really cooking in one direction. I want to be involved here. I want to be a buyer of every dip here because this is a long-term or a long-term sell.
Gold has been a really good example. So I started to buy gold in 22. And the thing is, when I trade Forex, it's 70% technical. And then I use an element of a fundamental bias, whether I'm pro or anti-dollar. And if I'm looking at the Australian dollar, I look at what's happening with China and all the bits that go in between.
Right.
But when it comes to stocks, even crypto and gold, I am looking predominantly at fundamentals. So, what I say to folks is try to join the dots. So at the end of the COVID debacle, we've got inflation that was double whatever any government claimed it was. And therefore, we've got this issue with fiat currencies. The ultimate safe haven is gold. And by that point, the crypto cycle was over. So we started buying gold at $1,800. And gold is now almost 100%. And we started buying silver at $1,750. And I buy the physical metal, and via a broker in the UK, they store it and insure it and everything. But I also then will trade it, as you say, just buying on the dips. And the thing is with gold, it just makes sense. And I mean, yesterday, silver came back up again. And so I think silver this year is up 20%, gold's up 30%. I've been involved in gold since the early 2000s. And people are being spoilt at the moment because this is nuts. You can go years and years and years. After the crash 2008, the stock market, the S&P took 5 years to get back to where it was.
Right.
Whereas gold only dropped half as much and recovered within a year, and then it went on and nearly tripled.
Right.
And then gold from 2012 was a terrible investment. So capturing that cycle has been really profitable. And then another way to, because I don't use leverage per se, certainly not with the physical stuff, I leverage it by buying mining stocks. And so last year, silver was up 50 or 60%. My best mining stock was up 260%. And it's still the same today. I was looking this morning with a client. Yesterday, silver hit the high from November. And some of the mining stocks, EXK was the one I made the most money on last year, is currently about 40% away from where it was in November. November, silver was at then the high. I mean, the all-time high is 49.50 from 2012. So the point is, silver in the ground at the moment and gold in the ground at the moment, to me, are at a discount. And so if silver's at the high, and this is 40% lower than where it was in November when it was at the high, the probability is far greater that it's going to do it. But it then gives you the leverage.
Sure.
And the same with crypto. I made a lot of money with crypto. And it's funny, I was reading the UK newspaper at the weekend, well, online, and it's kind of centre right. And the editorial team are fuddy-duddies. And it would appear most of the clients, the readers, are the same. You know, Bitcoin, it's like the tulip bubble of 1,600. And it's like, excuse me, we made 1,000% on Bitcoin. We made 6,000% on Cardano in 9 months. So anybody that's so closed mentally to, this is never catch on. I mean, there was the classic case in the early 2000s when there's an economist called Paul Krugman, and this guy's got a Nobel Prize, and he said, "Well,
he's actually is a neighbor of mine."
Oh, crikey, we best not tell him this bit then. But he said that the internet will never catch on and it'll go the way of the fax machine because nobody is going to pay with a credit card. And I think he was talking specifically about Amazon at the time.
Right.
Well, hey, he got that bit wrong, didn't he?
Right.
And that, to me, is what's happening with crypto now. I was in that era, and what people forget as well, they say, "Oh, Bitcoin, it's so volatile, it dropped all this way, it's terrible." Hang on, Amazon dropped 95% in 2003. And so the stock that is heralded as the best investment ever dropped 95%. Why? Because it was new technology. There weren't that many people using it. And I think Bezos was trying to transition from books onto everything. But that, to me, is where we're at with crypto. And that's what makes crypto so exciting. And I can't believe it. I actually bought some more last week at 105,000, and I could never envisage paying that for it.
Yeah.
But I think
I think the greatest argument when people talk about tulip mania is that tulip mania lasted for a year, I believe, right? I mean, I think from start to finish, crypto's been around for 20. The very longevity of the asset disproves the hyper bubble narrative. Because if you've been around for 20 years, people would have already been tired of the bubble. It clearly has clear asset value, which is that people protect their fiat or have some of their holdings in a non-fiat asset that is liquid, digital, and portable. And the crypto answers all those questions. It's fascinating.
Yeah, I didn't get it. One of my clients tried to persuade me to mine it in 2015. I was living in the Canary Islands at the time, and I say if we just started doing it from the Canary Islands, the cops would have been around because they would have thought we were growing weed in the basement because they monitor the electric.
Right.
But I didn't get it then. And then in 2019, when I started to understand the blockchain, it wasn't the token, it was the blockchain. And then I applied the same mentality to crypto as I did to stocks and everything else. So anything I bought had to have a fundamental reason to exist. It had to be faster or smarter or cheaper or revolutionizing the sector. And it had to be being used and have some kind of benefit. And it was more to do with the blockchain than it was to do with the actual tokens. And once I realized that was the aha moment. And so, I mean, I can share with you some of my screenshots from what we owned at the time and where they are now. I did a webinar in October of 2020, and Bitcoin was at about 13 grand, and I think Ethereum was at 200. And I said, I think that this could be the best investment decision of your lifetime. And I explained that I thought the Bitcoin would double, and it tripled within 6-8 weeks. But I also explained that once the big boys came in, at the time, Charlie Munger was saying it was rat poison. Jamie Dimon was saying he would sack anybody at JP Morgan that touched it. Larry Fink said it was a scheme for black money. And I said, listen, when this lot can get in legally, they'll suddenly flip it around and say, hey, now we're in the game. Now it's all, and that's where we're at.
Right.
And then with Trump, I mean, my best trades in recent years, MicroStrategy, I bought MicroStrategy right at the right time. That went up 1,400% in a year. And then we bought, when Trump got elected in November, I sent a telegram out to folks, says, look, I am buying HBAR. And I bought HBAR at 6.5 cents. And it went up 500% in 3 weeks. But the reason why I bought it was Trump comes in. He talks now, instead of the Biden administration and Trump last time trying to kill crypto, we are going to go full on at USA crypto. And he spoke about various companies. So I looked and I thought, well, okay, XRP is likely to benefit from this, probably Cardano, HBAR, etc. And it went nuts. And Cardano had been asleep for 3 years. That went up hundreds of percent in days. So again, if you can watch what's going on, and so now when you listen at the moment, Ethereum, there's one of the Trump brothers are pushing it, and there's one of the founders of Ethereum is trying to raise $500 million to have Ethereum on the treasury, and there's all these companies coming in, and even Pakistan now, apparently the country, is now going to hold some Bitcoin. And when you look at the USA, there's 22 million millionaires in the USA apparently. So if each has a Bitcoin, they've all gone, and there's 800 billionaires. Yeah. And like you said earlier about portability and all the rest of it, anybody that's got any sense and any financial nous, to me, is silly if they don't at least explore it.
Yeah, no, certainly. You probably are aware of this, but Tether, which is just stable coin, has actually now clearing more transactions in US dollars than Germany. I think it's just I read some ridiculous.
I think it's really
like it's literally like the third of the third biggest clearer of all US dollars in the world, which is just insane.
Yeah. There's another benefit with stable coins is that they have to hold treasury bills on their balance sheet,
right?
And the dollar. So even if you end up with the Chinese and the Japanese are buying less US debt and the T-bills, these guys, the stable coin holders will have to. So in a way, it's a way of the US still being able to sell their debt because they have to hold it. So it's a very smart move in that respect.
Super interesting point.
Yeah. I'm up to that.
I've never heard from anybody else. It's very, very interesting. Thank you for sharing that with it. I'd love to see, first of all, one question before I see this. You talk about having 1,000% gains, 300% gains, 400% gains. The question I have is, how do you know when to sell, or do you scale out? What is your process for making sure that those profits don't disappear? How do you
scale out? Because I'd learned from the dotcom boom and the pain of it. What we did with Bitcoin is when it doubled, we used to take the initial stake out. Okay. And then when it really started to go on a run, we'd take the stake out and some profit, and then we would buy the dip. And Bitcoin for 9 months was the easiest thing in the world because it just kept going up and pulling back, going up and pulling back. And so by the time it crashed, I had made significant profits. Everything I got was bought and paid for. So on the final dip when it broke, it didn't hurt me. Okay. And that's what I've done with crypto all the way. So for example, HBAR, say recently, when it doubled very quickly, I'm saying to clients, look, think about taking some stake out. When it got to 300% after 10 days, take your stake out. And when it got to 500%, for crying out loud, take the stake out and take some profit, because this will not carry on.
So generally, your basic rule of thumb is if it doubles, let's say it goes from 10,000 to 20,000, just in US dollars as an example, you'll take the original $10,000 out. The other 10 million in profit is staying in the market. And then let's say that $10,000 stays in the market again, doubles. Now it's $20,000. Perhaps you take the $10,000 of the profit out and leave another $10,000 in the market keep going. And now you're at 20,000 on initial 10,000 investment. Then you start 10,000 in the market. So it sounds like there's a hard and fast rule that when it doubles, you absolutely want to take your initial stake out to protect your capital. But then after that, it becomes more of a touch and feel kind of a
because again, the reason why I bought it in the first place was because it had to have one of the it's got to have these reasons to buy it.
Right.
And then the other thing, I don't always take the whole stake out, but what I will do is technically look at something and say, well, hang on, we're still 20% off a recent high. I'll take out 75% of the stake. So I do play it by ear. But having said all that, I mean, I did that all the way through. And then I had a client who, a very wealthy lady, she'd put 100 grand into just 4 of the cryptos that I had in my portfolio. So she put 100,000 into Bitcoin, Ethereum, Cardano, and XRP, I think.
Okay.
And she rang me up before it all crashed, and she said, "No, I really don't understand this broker thing that I'm with. Can you have a look? What do you?" And I had a look, and she was at 1.4 million from 100K.
Oh, she had levered. She had levered herself.
She just left it. She just forgot about it.
No, she didn't lever. She actually that was her P&L.
Yeah, she just forgot, and and so although I thought I was being super smart by taking the bits out all the way, she just left it. Right. But having said that, if she'd not contacted me when she did, then she would have gone through all the pain of the crash.
Yeah.
So I mean, my first thing was just take half of it now quickly. Right. And let's have a look. But yeah, that's my thing. I mean, when we're talking crypto and we're talking gold and we're talking stocks, it's a completely different game to me for Forex. Forex, I risk 0.5%, and I am looking to make 1 to 2%, and I am only looking to make 3 to 5% a month. But I'm doing it on a big account.
Got it.
So this side of things is completely different to what I do in Forex. And so, I've never made 1,000% on anything in Forex.
No, I didn't. Unless you were doing it at huge leverage. Perhaps maybe you could share your screen with us and just kind of give us a little bit of a peek into some of maybe your Forex trades or just your process of how you would pick your entries if you have a chance.
Well, what I'll do, I'll quickly show you a few things where what I was talking about at the time. I always find it's really useful. And, anybody, marketers will say, oh, if you just bought here and you did that and you made a fortune.
Right.
But I'll quickly show you some of the stuff that I did at the time, because I think it's really important to understand what motivated you at the time to do it. I'm trying to now share screen. There we go. Can you see my screen?
Yep. Okay. Yeah, I see that it's a cryptocurrency course.
Yeah. So this was the mini course we set up in Forex Mentor Pro, and this was the webinar from 2020. And if anybody would like to see it, this was the title, Why I Believe in Crypto. It's actually on YouTube. And so on YouTube, you will understand what I meant and why I was thinking. And that's to say, the really important thing, I think, is why I felt like that at the time. Because anybody can be really smart after the event, but you've also got to be aware of the emotions at the time.
Sure.
And then this is Mentor Pro, so we've got the 3 latest posts and we've got all the courses. But I have a separate section for investing. And I started explaining to people in July 2020, when gold was around 1,800, look, this is what I'm doing and this is why I'm doing it. And so we caught that cycle. And then I got back into crypto in 2023. So yes, it all tanked. It all went to sleep. But I could see the signs technically and fundamentally what was going on, that it looked as though it was all going to liven back up again. So that's important to me. And I also explain about catching the right cycle at the right time. Like I said earlier, the S&P 2012 was way behind gold, but then the S&P went on a parabolic run and gold went nowhere. So you want to try to catch the right one at the right time, as we talked about. I look every day. I'm looking at the DAX here. I'm trying to work out where the big money's going. And I did particularly well recently, where this is the T-bond futures. And this here was where we started to get with the T-bills, where the interest rates were that bad that the bond market could have broken what Trump's doing. So that was the point on that day when Trump blinked.
Right.
And on that day, I bought some FANG stocks, and I never trade FANG stocks. But why? Because once the pressure was off, he's going to delay the tariffs and everything.
Right.
And then when it got the other week recently, came up to here, I said to people, look, Wall Street, the market makers, they're going to try push this to 6,000. But when it gets up here, I'm out, because for me, this could well be a blow off top. And so I'm looking at that all the time. Gold, as you know, I talked about from, the start of the year. I mean, what's gold up this year? Gold this year was up 32%. Silver, yes. And again, technically, with silver, if you're going to take any profit, yesterday was the time, because it came up to a double top.
Right.
For the best trade ever, for a marketer's dream, was this one. This was MicroStrategy. And as you will be aware, they hold a lot of Bitcoin. And in the October of 23, I said to folks, we had a consolidation period, Bitcoin set off, and MicroStrategy didn't. So I did use some leverage on this one. But again, it was joining the dots. Well, hang on, they're buying Bitcoin like crazy. Michael Saylor's pro Bitcoin to an extreme. Then this should go up. And MicroStrategy altogether in the end went up 1,500%. It was nuts. And from a marketer's dream point of view, and I did share this on Twitter, this is one of our members. She was late getting in, and she bought in the January of 24, and she sold in November when I sent the telegram out. She made 1,000%.
Wow.
1,000% on a stock. Insane. But I say, this is 40 years of doing this. I've never had one as good as this ever, and probably never will again. But I've been buying again of late, and I bought some more again the other week. We had a breakout and off it went. This is H-bar I was talking to you about before. This is Trump getting in. Telegram I sent out saying I'm buying at 6.5 cents, and it just went nuts. So there it's at 180% double top. Take the stake. Buy here. Please take the stake. For God's sake, take some profit. And then I bought again on the dip. And then I took the profit again when we came back up to a double top. And I've been buying again recently. So
that break. Now, if things go wrong, would you get out at the bottom of that channel, like
No. What I tend to do is I am buying and holding, but because I'm taking the stake out, it's now risk free. So it doesn't matter to me what it's going to do. I still believe fundamentally that this is going to do well, and it still has the potential to do 100% back to where it was.
Right.
And so, and Cardano is a really good example. I mean, Cardano we bought for 5 cents in 2000. It went up 6,000%, so we took substantial profit, and then I had a load of it left, and it just sat there for 3 years. But had I cashed it in, paid the tax, and put the money in the bank, it would have earned nothing. But when it broke out again, when Trump got elected, it went up hundreds of percent.
Right.
Now, I don't trade it per se, but having said that, we are just experimenting now with a platform that basically is like a funded crypto account. I would not, under any circumstances, ever trade crypto with leverage, because you will get burned all the time because of the volatility.
Right.
But this thing with a funded account certainly makes it really interesting.
Interesting. So, you've been mentoring for quite a long time. It's like 10, 15 years. I don't even know.
15
years. Across that time span, I'm sure you've mentored thousands of people. Could you give me like top 3 sins, the top 3 flaws that people have, and then perhaps maybe your top 3 best stories? Because everybody always talks about all the problems. I'd love to hear successes too. We'd love to know.
The biggest issue is lack of discipline. And a lot of that. So when somebody comes to us, the first thing we get them to do is to write out a business and life plan. And at which point there's like, oh God. Right. And people really struggle with that. But that's what my mentor did. He said, why are you doing this? What's the reason for it? Let's set some measurable goals and let's be realistic, because you're not going to be quitting your job next week. Right. And before COVID, my average client was 50 plus, fed up either running their own business or middle management and thinking of quitting the job. And, if you're on 6 figures, you do not want to be quitting your job just to go full-time trading Forex. Right. Because we know that will not end well. So I also say to them, look, you want to start thinking about multiple streams of income. Can you, could you become a consultant in the work that you're doing now? Could you go down to a 3-day week? Can you teach people things? Can you create something or anything to spread the risk? Because it's when you're doing this on your own, as I said, I had 2.5 years of it going down. It's so distressing and depressing. It's a horrible situation to be in. Over leveraging, over trading, all the usual things, thinking that they've found the next thing. So I taught a young lad a few years ago. He works with us now. He trades for clients, really good trader. But even about a year after I'd taught him, when we'd gone through everything, he was going to buy something off some guru on YouTube. And it's like, oh, for crying out loud, there is no secret sauce. There is no special indicator. You have to learn the basics, and then you have to, and stop jumping from one strategy to another. If you don't like mine, go try yours. If you don't like either of ours, try something else. But don't keep stopping all the time. Because like you said earlier, it's not complicated. You don't need loads of indicators. You've got 3 dots. I've got 4 or 5 lines. That's all you need.
Yeah.
And I think that's the worst. Well, I said earlier, I think I succeeded ultimately because I did not want to go back to the UK with the tail between my legs and uproot the children to go back. And so I was so motivated, I had to make this work.
It's really interesting. So it's almost like the pain of going back was greater.
Oh, yes.
Greater than the pain of over trading and the pain of, trying to, revenge trading. Sort of all, like, the reason we, of course, do all of those things is because we don't want to face the pain of loss in the market. But the pain of loss in life was greater than the pain of loss in the market. So you were willing to take the loss in the market in order to stay in the life that you wanted.
Yeah.
Very interesting.
And a lot of people, because they're comfortable financially, the older ones that come to us, then they've not got that hunger. And then you can get the other extreme. You can get somebody from what used to be called the third world. It's starting to overtake the rest of us now. There's somebody from the third world that maybe has got $200 of life savings, has fallen for some nonsense about getting rich quick. So they come in with completely unreasonable expectations. Right. So for me, if somebody comes to me wanting to be taught privately, I say, I don't do much now. I'm trying to focus on options. And but basically, I'm trying to work out if they're motivated enough. Because I just say to them, look, I am not going to drag you. If you won't do the work and you can't maintain the enthusiasm you've got today over at least 6 months, you best just not do it. Right. And that kind of surprises them. Like, well, they think that they're interviewing me, and I'm thinking, no, I don't. You've got to have, the Spanish call it ganas. You've got to have this get up and go and be determined. Mm-hmm. And the people who succeed the best are the ones that wake up and smell the coffee. After all the silly systems and all the silly toys they've bought and all the daft things they've done, they finally get to the point I got to and say, I know I can do this, but I need to do it properly. And I need somebody to show me how to do it and somebody to be accountable to. I have a lady I taught last year, and she said every time she went to push the button, she's going, oh, is he going to bollock? Is he going to bollock? Is he going to tell me off? Is he going to tell me off? And it's a great leveler. Somebody or somewhere, if you can't do it yourself, just to say, hang on a minute, is this a good idea? Do you have, and we have it now with people that have a checklist. It's 10 reasons you could pick from to pick your 5, and then have another little list of what could go wrong. Oh, well, it's near a double top, or there's NFP news coming out in 2 hours, or whatever. And to me,
that's super interesting. There's of course a technical checklist, right? Which is just are all my indicators lining up? Is there Confluence? Yeah. But there's also these peripheral things that we never think about that always sabotage trades, that are news, props, calendar events, general market. There are days when the market couldn't care less about anything but whatever is going off in some geopolitical spot in the world, and that has nothing to do with supply and demand becomes completely answered.
And the issue we have at the minute is Trump, because I traded through the previous Trump presidency and it was wild, but this is just insane. I explained to somebody the other week.
We love Trump. We love the volatility because it's just plays straight into our type of trading. My partner actually loves trading Trump, but you're right. It all depends on the approach that you have, and he could be either best friend or your worst enemy as far as trading goes.
Well, I'm trying to trade, so I'll probably stay in a trade for 7 or 8 hours, and I'm trying to make 2-3 times the risk.
Right.
And so we had it last week. We were in the trade. We're up 100 pips. Everything's going great. And then suddenly Trump says something else. And sugar, it came back down. Yeah. So that's the big challenge at the minute. But the other thing is what we all forget, and probably your side of the pond maybe more than ours, is there's a potential third world war going on with Russia and Ukraine if it gets any worse. You've got the situation in Gaza and Iran. And, there's all these things going on at the minute. And obviously it affects gold and it affects oil, et cetera, et cetera. So if you're going to trade non-Forex things, you need to be well up to speed with what's going on. I mean, for me, trading is 95% planning and it's 5% execution. And that's great.
What was it?
95% planning and 5%. Yeah, and 5% execution.
So, my American ear needs to hear that word planning, not planning. So 95% plan and 5% execution.
Yes. Yeah.
Wow. Yeah.
I plan on the weekend for Forex when the markets are shut. And I got this from a mentor because I was so adrenaline.
I love that because everything, like all my strategy tweaks, all of my strategy reviews, I can only do on the weekend.
Yeah.
You need the screen to be turned off. Otherwise, you are going to be completely polluted by whatever price action is happening.
It's like, oh, sorry, just excuse me, the euro's moving. And so,
look at this breakout. You forget. You need like that peace and quiet of when nothing was moving, so you can really look at it from a fresh perspective. It's like looking at a painting. You really need a new perspective of going, and you notice a lot of things that you never noticed before. I don't know if you find it. I feel like I have the same strategy. I've been trading forever, and I discover new things and new little nuances and new interesting ideas out of it all the time when I am nice and quiet.
Yeah. Well, for me, my mentor, Rich Friesen, he had me on camera like this 20 years ago, and we were going to trade the London session on a 15-minute chart, and he got me wearing a heart monitor. And I went to move to take the trade, and he's going, "Stop, what are you doing?" I said, "What? Your heart rate's shot up, your feet are going like mad, you're just an adrenaline junkie." Yeah. And so to me, he got me onto 4-hour charts, which was great, because instead of 8 hours a day, I was 3, and I could plan. And I would make a plan I'd make a weekly plan, daily plan, and then I would look at something on a 4-hour, and unless it broke and closed above or below, then I would leave it alone. And that was, for me, was the turning point to starting to do this properly. Now I do it on a weekly and a daily. I don't take many trades, but I'm trying to catch a big one. So I'm not
just looking more about that process. When you're sitting on the weekend, you're looking at the charts. Do you take notes? Do you annotate the chart? What is the actual physical part of the plan?
Well, because I've been looking at them for so long, I think what happens when you've done technical trading for so long, I mean, I've been doing it 20 odd years, it talks to you. And you start to understand, you get the feel and you get the rhythm. I found years ago, I had a month off and my wife wouldn't let me take the laptop, and I came back and it was like starting again. So I don't take that many notes, but what I do, I look at the weekly and I'm looking for structure and I'm looking for an interesting area. And then if it doesn't interest me, I forget it. And then I go to the next one. And I look at 20 odd pairs. I used to just trade the majors. So by doing that, if some weeks the majors all are livening up and some weeks there's nothing happening. Right. But then I go down to the daily and I'm looking for 5 points of contact. And so I try to end up with 4 or 5 possibilities and I grade them. An A grade, I will put the order on and I will walk away. B grade, Australian news is Tuesday overnight. I will wait until after that news comes out. And then the C grade is like, well, it looks half interesting. I'll check it every day, but otherwise not. But for me, I think most people just don't look at the big picture. If you scroll back every time, you look on a weekly and say, well, hang on, it bounced there in 2022 and 18 and 60. It's probably going to do it again. People focus too much on the very specific area at the time. Right. And then afterwards, when they look at your presentation and say, oh, crikey, why didn't I do it? Because they're just not looking at the big picture.
Yes, so like they don't have a wide enough angle.
Exactly. Yeah.
The situation. Interesting. We have to go. Unfortunately, I could talk to you for another hour. As fast fate's going. Please tell everybody where they could find you. I mean, I know you're sort of very, very selective these days, but you also, it sounds like you also have you do have a website and a.
Yeah. We still have we have a members area, and like folks can join for $69 a month or $500 for a lifetime, and there's full courses in there. I still contribute, and then I've got 4 guys that work with us now who I taught since 2008, and then they share their trade ideas, and then we have a live session as well. And if they don't like it, within 30 days, you get your money back. So we still teach, but it's more on a group basis. And then I have a young guy that does teach people privately.
And you're still trading every week, right? You're still in there.
To be honest, I was getting bored with Forex 2020, and then crypto just rekindled my interest, and then gold got my interest. So for me now, it's the overall thing I'm looking at all the time. And so this week I was focusing a bit more on Forex. The last few weeks, it's been, for my strategy, it's been all over the place. I've been making money on crypto or gold. So, and I mix in quite a lot of fundamental knowledge to be able to make the decision where to focus this week.
Right.
So for me, yeah, it regenerated me for sure. I was getting stale, and now I'm not.
Great. That's wonderful. That's the best. That's the best kind. Well, I want to thank you very, very much. Everybody, please follow and subscribe to the Trading Battle as always to get these amazing interviews. I want to thank our guest, Marc Walton, who shared some amazingly interesting insights. All of his links will be in the comments below. Otherwise, for the Trading Battle, I'm Forrest Schlossberg. I'll see you guys in the markets. Over and out.
Thank you very much.
Thank you, Matt.